Hey everybody, what's going on? Welcome back to another free video. This is our watch list for Tuesday, August 15th. I put these videos out for you guys for free every single day. I do ask one thing of you guys for these videos to be free. When the ads roll through, let them roll through. That helps pay for my time to do these videos for you guys. So I thank you in advance for doing that. I appreciate it. If you like the videos, make sure you have subscribed and click the bell. The bell will give you the notifications for when I do send out the videos every single day. Okay, most times I do these live. I have done a couple recorded sessions today and yesterday. It'll vary back and forth as we go through this stuff. But this is, again, our watch list for Tuesday, August 15th. This strategy is based off of the Strat by Rob Smith. RIP. Rob, thank you for giving us what you have given us. It is the easiest strategy that you guys will ever come across. So we're going to go through the watch list, the setups that I found for tomorrow. Okay, and then we're going to show you guys and talk about a little bit of the nuances of the strategy, the candlestick numbers, time frame continuity, etc., etc. A lot of you guys who've been following me and have been part of the strat for a long time know that stuff, but there's also a lot of newcomers, so I like to make sure I run through that. And it's not a bad reminder for all of us to walk through this stuff and get a better understanding of it if we're not fully immersed in it. So let's get started. I do want to say the screen that you're looking at, that is TradingView. If you're going to day trade or swing trade, you're going to need something like this. I provided a link down below in the description. That link gives you a free 30-day trial to TradingView, and if you've clicked on that link and sign up, you get up to $30 off of that subscription if you choose to go forward with it, but you need to start by clicking on that link. So let's get started. We're going to start with NEO. So we talked about NEO yesterday, and we said it was a 2 down green, and we're going to look for it to trend up. Well, it didn't. And so I like when it does this stuff because it shows us that it doesn't always happen the way it says it's going to. Every trade, every strategy that you guys look at is always based off of probability, meaning that, we don't know what this next candle is going to open up as. We just don't. And so we have to base it off of probability. And anybody who has a strategy or is telling you to get into trades and they know 100% what's going to happen, they don't. It's all based off of probability. And it always will be. So that's how we base the trades off of this strategy and any other strategy that you guys would look at. So what we've got here, we have a 2 down that finished green. And you notice the candlestick numbers, that's part of the indicator that I created for you guys, as is a bunch of other things like the time frame continuity. But when we have a 2 down, meaning this candle only broke the low of the previous candle. So that is a 2 down. Now it's a 2 down that finished green. When it finishes green instead of red like we had here, that tells me there's a higher probability of this trending back to the upside. The other thing that we have is an actionable signal. So there's 3 actionable signals when we're talking about the strat. One is an inside bar, which you don't see on the screen, but it's a 1 bar. 2 is a hammer candle, which you see right here. We have this body with a long wick to the bottom. That wick will be at least 2 times the size of this body right here. That is a hammer candle. Looks like a hammer candle. And the opposite is a shooter. Or the third is a shooter. And it's the exact opposite or the inverse of this, where the body's at the bottom and the wick is to the top. That's a bearish pattern. So we have a bullish pattern here, meaning we are looking for this to trend up. We could look for calls here at 1256. And when we mark our targets out, they're just marked out at the high of the preceding wick. Okay, so here and here, it's not the high because there's a gap. And so anytime we have a gap here, we need to fill that gap. The bottom of that candlestick, the wick, becomes that next target, and then the target above that would just continue on to the high of that same candle right up here. So that's what we're looking for on NEO. We're looking for calls at 1256, and I don't suggest you guys stay on the same time frame. I mean, you can if you're trading common shares, but for options, to manage your risk the best, I recommend going down to a smaller time frame. So my bread and butter always, guys, is the 15-minute and to manage on the 5. So I do what we're seeing here on the 15-minute chart. I set my triggers and targets according to the setups that I see. I've got a video on the different strat setups if you guys want to check that out. I've got over 100 videos for you guys to learn this stuff, okay? So I set it on the 15 and then I manage it on the 5 because that allows me to manage my risk the best. And your number one job as a trader is to manage your risk, manage your capital. Not win, but to manage, okay? That is NEO. We're going to move on to Coca-Cola with the inside. Is it the inside? No, it's a 2 up that finished red. So We talked about the 2 down that finished green. Now we've got a 2 up, meaning this candle right here only broke the high of the previous candle. So now in turn, we have a 2 up, but again, it finished red. So probability that it's going to trend down, we're going to look for it to trend down. So there's a couple things here. We have the 2 up that finished red. We have time frame continuity outside of the quarterly on our side to trend back down for Coca-Cola, and we have this weekly trigger here. That's the pink line. That's how I set my weekly triggers. I did a video on the weekly setups. If you look, we are currently trading inside bar on the week, but last week we were also inside bar. So we set our triggers to the high and low of this inside bar. We're going to look for it to trend to the downside, and I should actually move this trigger down. I notice it's a little higher there than it should be. So there. So on the weekly, we can look for this to trigger to the downside as well. We're closer to going 2 down than we are to 2 up. So when we go back to the daily chart, let me show you something. We trigger our second target. First target's right here. Second target is the pink line. If we trigger that second target, you can look for a swing trade. You can look to hold this thing a little longer if you didn't get a 0 DTE. Okay? And I think Coke probably expires Wednesday, Friday. Might be a couple expiries. I'm not quite sure on that. Might only be Friday. But you could look at a potential swing on Coca-Cola if we trigger the weekly. That's a second target on the daily, trigger on the weekly, okay? It's a domino effect. The day triggers the week, triggers the month. That's how it happens. That's how the strat works. That's how time frame continuity works, okay? Time frame continuity, not a lot of people talk about it. If you don't know what this is right here, this hourly, daily, weekly, monthly, quarterly, yearly, type in time frame into my YouTube channel. I'm going to see if that YouTube channel is on here. I always do. It's not today again. One day it'll be on there. But you can go into the channel, you type in time frame, and that video will come up for you. It'll explain time frame continuity for you guys. Okay, let's move on to CVS. CVS, same thing. So you notice we have these 2 pink lines. That's the inside bar setup on the weekly that we're waiting to break out of. So I can go to the weekly. There's the 3-1 setup. We're looking to break out of it, okay, with this candle right here. This is the current live candle for this week. Now we go to the daily. On the daily chart, we've got a double inside bar. So I want to go back and show you guys the last time we had a double inside bar. You notice the inside bars, or the 1 bars, are painted yellow. The outside bars, or the 3 bars, are painted white. That's also part of my indicator. Now let's go back and find the last time we had a double blue. That's right here. That double blue is also part of my indicator. Shows you where the double inside bars are easily, where you can find them easily, okay? They're lined up for you. Inside bar, we triggered, and we hit targets, okay? Did exactly what it said it was going to do. And over the next few days, it continued to trend up. But on this day, it hit triggers, it hit targets, it did exactly what it said it was going to do. So we're going to look for that exact same type of thing to happen here on this double inside bar. The difference is we've got this weekly setup as well. So again, if we trigger to the upside, we can look for a potential swing trade on CVS. We move on to Citibank. So Citibank also with the inside bar. We can, and again, here's the thing, guys, like this one right here, we triggered and we didn't hit targets, okay? So you would have had to manage that trade and find out a spot to get out of it, unless you were swinging it, okay? And then it did actually end up hitting targets, okay? It did do that. So we have an inside bar again. We'll see how it plays out. We can look for calls at 44.41 to the upside, or puts at 43.98 to the downside. If you guys are wondering what I'm talking about when I say I manage trades, you can go look at any of my short videos. It shows you exactly how I trade every single day, how I do my setups and my triggers and my targets on the 15-minute chart, and how I manage it on the 5. That's where I decide where I should get out of the trade. Okay, so whether I hit targets that were set on the 15 or the candlesticks reverse, that's how I decide how to get out. This strategy gives you something that most strategies don't. It gives you a clear and precise spot, a concise spot on where you should be getting out and how to get out, okay, to protect your risk or protect your capital and manage your risk the absolute best you can. This strategy does it better than probably most of them out there. Okay, let's move on to XOM. So XOM has a couple things here. Has an inside bar. That's number 1. And a lot of people ask me what I do for the top 5. So the top 5 go to the Griswold Gold members. You can access that through the Discord. The link is in the description below. That Discord's free to join. There is a paid portion of it though, okay? So that paid portion gets a 1-hour strat course that I've created. Takes you from the easy stuff right up to the more difficult stuff. It gives you live trading bots throughout the day. It gives you the top 5 from these lists every single day. It gives you one-on-ones with myself, and it's a great value. You won't find anything cheaper out there. It's $50. I don't need your money, but it pays for my time, for my creations that I've done for the indicators and everything else. So that's if I wanted to charge more, I could. I don't need to charge more. It is there just to help pay for my time. Okay, so we look at ExxonMobil. We have a few things. Inside bar is number 1. That's an actionable signal. We have 2 actionable signals. We also have the hammer candle that we talked about, the body, and then the big long wick at the bottom. And then the third thing is this right here. One of the really, really important key parts of the strat, and really it should be on any strategy, is time frame continuity. Everything across the board on all time frames, hourly, daily, weekly, monthly, quarterly, yearly, are all saying there's buyers on board for XOM. So we are going to look for calls here at 111.98. Puts are still possible, okay, at 110.78. First target, top of the preceding wick, and then you just have to go back in time and find the next wick for your next target, which is substantially higher. It would be probably tough for us to hit this one here. Let me get this on there. There we go, and we'll change that to green. That's probably a tough target to hit tomorrow, but that's where it stands for the second target. So you can take your profits anywhere within there, but I want you to manage it on a smaller time frame if you're playing off of the daily charts. Now, if you guys have questions, please, please, please leave them down below in the comment section. You can do it on Twitter at Mr. Clark Griswold. You can follow me there, or you can do it in the Discord. I get back to you guys on all of those platforms. I recently started a Instagram platform as well, so you can probably get a hold of me there as well. But the first ones that I mentioned there are probably the easiest. And I will answer your questions. If you ask them, I'm here to answer your questions and help you guys out, okay? DraftKings, inside bar, hammer candle, so we can look for the calls there at 29.36. DIA, inside bar, calls at 350, 350, puts at 351.77. If you're wondering where I'm getting the numbers, if you follow these lines across, these are our trigger points. That's where we get into the trade. We're not into the trade until it breaks that point. And that's your point where you go in force, where you actually get into the trade as soon as you cross that trigger point. So you follow that across, that's where I'm getting my numbers from. 350, 350 for the trigger on calls, 351.77 for the trigger on puts on DIA. We move on to AFRM. AFRM, okay, 2 down green. I'll call that a hammer candle. We can look for the calls there at 15.15. Datadog, 2 down green. We can look for, I'm going to zoom in here so you guys can see that a little bit better. $90.30 is the trigger there. First target at 90.96. And this is what we call a 1-2-2 rev strat. And really, we're still looking for that 2-2 reversal, but it has a 1 preceding it. So we look at it as a 1-2-2 rev strat. GS, Goldman Sachs, 2 down green, hammer candle. Time frame continuity on the hourly, daily, weekly, quarterly. The majority of them are there. Realistically, guys, when I'm trading, I need these 2, hourly and daily. Anything else is a bonus, meaning, and it's all it means is there's higher probability of that trade working out. But for me, most of the time, because I'm only in trades for about 15 minutes, I only need these 2 in my favor. So calls at 338.45 on Goldman Sachs. IWM, 2 down green, hammer candle, time frame continuity, calls at 190.70. 2 down green, not quite a hammer, but pretty close. Time frame continuity again, calls at 87.40 on Morgan Stanley. Tesla, 2 down green, calls at 240.66. Airbnb, hammer candle, it is red, so a little bit less probability there, but it is an inside bar. So we can look at playing this either way. Time frame continuity, depending on what happens here, we could be forced either way, but we can look at calls at 133.79 or the puts at 131.74. That purple line, guys, that is my 3-month trigger. Okay, so if we go on the 3 months, you can see I've gone 2 up on the 3-month chart off of this inside bar, and then it went way 2 up and has started to come down now. So we'll see how that one plays out tomorrow, which direction it's going to sway. We go on to Boeing. Boeing has a 2 up red. So we're going to look for puts in this situation. Time frame continuity tells us that for the most part here. We are also stuck on an inside week. Okay, that's the top and bottom, my pink lines. This yellow circle on the time frame continuity indicator also tells me that we're stuck inside. If I go to the week, it'll tell me that exact stuff. There's my triggers on the inside bar and a current inside bar on the week, so we're looking to break out of that as well. BAC 3-1 setup. Okay, these are rare patterns, rare setups. You don't see them very often. Outside bar, inside bar, 3-1 setup. They're signified by this yellow highlight, also part of my indicator. We scroll back to see the last time we had a 3-1. There it is. And that's the potential of it. Now, we gapped up. If you don't know how to play gaps, I've got a 4-video series on that as well. 4 different videos showing you guys how to play the gap. Okay, it's basically a orb. You're playing the opening range breakout. 3-1 setup, this thing ran. Okay, so that's what we're looking for this 3-1 setup to do here on BAC again. That's the probability of it, okay? The probability says when we have consolidation with that inside bar and the outside bar preceding it, we tend to go on big runs. So that's what we're going to look for again on BAC. BIDU, 2 down green, calls at 137.60. Carnival Cruise Lines, 2 down green, calls at 16.85. CVX, okay, so this one's a little different, and I wanted to put it on here because this is not a 2-2 reversal, okay? This is a 2-2 continuation is what we'd be looking for here. So we had a hammer candle. Okay, we had this big, long, bullish candle here, and then we ended today with a hammer candle, also a bullish pattern. We've got really good time frame continuity, so we've got a couple things going in our favor. Now, we can look for the continuations here. 2-2 continuation, you don't have to look for the reversal. But once we break that, now we're in force. That hammer has gone in force, and we look for the 2-2 continuation triggers, and the targets are still the same, but we have to go back in time to find that target. So how far back? Looks like that right there. Where is it? Do that. Whoops. Try that again. That is your first target. Seems that way anyways. That's your first target off of that 2-2 continuation. Okay, so from CVX, let's carry on to eBay. eBay has that inside bar. We are also looking to go 2 up on the week right here. We also are stuck on an inside bar. Or are we? Do we break out of it? Let's go to the quarterly and see if that's current. It is. So we've trended up already on that quarterly all the way up here and then come back down. Could potentially look for an outside bar setup here on the 3-month. Okay, but we head back to the daily. Inside bar on eBay. Let's zoom in so you guys can see that better. And we can look for the calls at 44.34, puts at 43.68. DocuSign, there's that 2 down green. So Rob Smith used to call this 2-2 on a Tuesday. We look for the 2-2 reversals on the Tuesday. 2-2 on a Tuesday. Doesn't matter up or down. That's what we're looking for, okay? So DocuSign, 2 down green. We look for the calls at 49.58. Macy's, 2 down green. We look for those reversals. And again, this was a 2 down green. This wasn't a real bullish pattern, but it was a 2 down green and it still trended down, okay? So that's the probability of it. This one looks a little bit more bullish. We've got the big, thick body here, so we can look for calls on this one on Tuesday. Netflix, 2 down green. We look for those calls at 428.85. And let's switch that target down. There we go. And we look for calls at 428.85. Starbucks, inside bar. We look for the calls at 101.21. Puts at 120. And again, we have this inside bar set up. So we're stuck on the inside bar right in the middle. We'll see how that one plays out as the week rolls on. Guys, that's a list. I hope you enjoyed the video. If you did, let me know. If you didn't, let me know. Please leave the comments down below. It helps with the algorithm. Share this to some of your friends if you think it would help them as well in their trading journey. This is, I promise you, the easiest strategy that you guys will come across. Watch the learning tool videos that I have, okay? I've set up playlists for you guys. If you don't want to sift through the playlist, I do have that course that I mentioned. It's really simple. It's a $50 course, but you're not just getting that. You're getting the membership. You're getting the one-on-ones with me. You're getting the live trading bots. You're getting the top 5s. and you're getting the indicator. Okay, so it's a lot of stuff rolled into just one simple price that you can earn back in one trade, and I show you how to do that plenty of times on this channel. Okay, so thank you guys for watching. I wish you nothing but the best on your trading journey on Tuesday and the rest of this week. Good luck. God bless. Continue on that journey, guys. Push through, and we will see you on the next one. Bye-bye.